For joining us this morning. I would tell you that in my conversations with Kansans, very few, I don't know if I've had a conversation with a Kansan who sees their economic future brighter. They see it, they're more disillusioned. No one feels more secure in their job. No one feels like their children are going to have a brighter future. Parents are concerned about their children's opportunities when they graduate from school, ability to pay back student loans, worried about saving for their own retirement. People are worried about having enough income and savings to pay for health care emergencies. So the sense of an economic recovery is far from being felt universally with Kansans that I visit with across our state. I wanted to just raise two questions. One, in part, that circumstance is related to significantly lower agriculture commodity prices, significantly lower prices in oil production, natural gas production, and part of that is a consequence of, I assume, the value of our dollar in comparison to other currencies and our ability to promote exports, both of those, certainly of agriculture commodities, although the law now allows for the export of oil as well. Where are we in the value of our dollar? What's the intermediate expectations for us to be able to jumpstart the sale of wheat, cattle, corn, and other products, airplanes that are manufactured in our state that seemingly are not able to access those markets in part because of the value of our currency?
So the value of the dollar has increased significantly since, say, mid-2014. Partly that reflects the fact that the U.S. has enjoyed a stronger recovery than many other advanced nations, and that's created an expectation that in the U.S. interest rates will rise at a more rapid pace than in other parts of the world, and that's induced inflows into our assets that have pushed up the dollar. But more broadly, the trends you've seen in commodity prices I think reflect a larger set of global forces. In some cases, we've seen significant increases in the supply of commodities. In the case of oil, the rapid growth of U.S. ability to supply oil markets has been a factor. And then there's been a slowdown in global growth, and particularly in China, which has been an important consumer of so many commodities. China's on a path and is understood to be, this will continue, a path of slowing growth. And the plummet, you've seen commodity prices plummet for many commodity prices just because of basic supply and demand considerations. The dollar makes some difference to that as well.
We often talk about, when we talk about exports, trade agreements, has the Fed weighed in, or have you expressed an opinion previously about other countries and their ability to manipulate currencies to our disadvantage of exports?
The responsibility for currency policy rests with the Secretary of the Treasury, and we don't weigh in on that.
Madam Chairwoman, let me ask you about something in your testimony. You indicate that business investment outside the energy sector was surprisingly weak. Would you indicate to me, elaborate on the factors that lead you to that statement? And when you exclude the energy sector, is that just because of definition, or is something happening in the energy sector that indicates investment?
Well, drilling activity has been very important, and it's counted as part of investment activity. So with the huge plunge in oil prices, even though there's been some recovery, we have seen the number of rigs in operation just plummet. And that's part of why aggregate investment spending has been so weak. And we understand that and expect it because it reflects the decline in oil prices. But even when we go outside the energy sector or other sectors that are directly related to energy and supplying inputs to it, investment spending recently, and this is just a report on the data, I don't have a story to offer you on why this has happened. It has been surprisingly weak over the last several months. It hasn't been very strong investment spending generally. We talked about this earlier during the recovery, but it has been, and we think we understand some reasons why it's generally been weak, namely slow growth and less rapid increase in the labor force, but it has been surprisingly weak in recent months. And it's something we're watching, and I can't tell you just what that's due to.
I wouldn't expect you to say this, but in my view, in part, that lack of investment or that reduction in investment is related to a wide array of circumstances. One of them would be the debt and deficit, the uncertainty of our economy, lack of economic growth. Generally, the economic indicators are downtrending, not uptrending a sufficient number of times to instill a sense of confidence. The next regulation that may come their way as a business person, just decisions to make investments. People are deciding it's more risky to invest than to not.
Well, those things are certainly mentioned by business people. In recent quarters, corporate earnings have also been under downward pressure for a variety of reasons.
Well, I would conclude my remarks by indicating that one of the places we ought to focus our attention is on innovation, startup businesses, new entrepreneurs, and the uncertainty that they face is even more of has a more dramatic consequence than a larger business that can better internalize and handle that uncertainty. Mr. Chairman.